The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 29th, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential, that is something we must master each and every day. So let's begin with a few empowering beliefs. The first one brought to us by Pablo Picasso out there. And he goes on to say, inspiration exists, but it must find you working. But it must find you working. How about that? That's how you get inspired. According to Pablo Picasso, Henry Ford, obstacles are those frightful things you see when you take your eyes off the goal. How about that? How about that for setting an outcome for the day and just being totally laser focused on that and not letting any obstacles get in your way? That's the way to accomplish what it is that you want in life. How about Plato? Plato once said, "We can easily forgive a child who is afraid of the dark. The real tragedy of life is when men are afraid of the light." Something to think about. And lastly, let's take a look at one of our Japanese proverbs out here. Fall 7 times and stand up 8. No question. Always pick yourself up off the floor, folks. You know, success leaves clues, and this is why I want you to understand patterns out here in the marketplace. We're going to take a look at them, and especially I want you to understand those triggers, those candlesticks out there. This is why, and this is how you will be able to read the message of the market. So let's go read the message of the markets here right now. We've got the Dow is trading off about 34 points out at 15,524. S&P down 4 points at 1687. NASDAQ off 2 points at 3611. Russell 2000 down $2.70 at 1045. New York Stock Exchange, leader in the clubhouse, down 0.4% right now, off 37 points. Net declining issues, minus 657. Folks, you get a minus 93 today, and guess who owns the ball? Guess who would own the ball if there's minus 93 or more net declining issues? That's right, the bears out here. So we're seeing a market that is trying to roll, albeit very slowly out here. Our call number is 877-927-6648. Give us a call. We could take a look at your stock chart. Let's go take a look at the indexes as we do each time during this, each day at this hour. We're going to start off by taking a look at the S&P 500. The May 22nd high out there is 1687.18. Right now it's 1687.89. The low so far interest session has been 1687.16. So it's tested that area. A close today back above it, then you'd have a successful test of a swing point high, and most likely on lighter volume, because there was big volume on May 22nd, and we haven't seen that kind of volume in the markets here for quite some time. So if you get a close back above 1687.18, guess what? That says that maybe you'd have to look at the New York Stock Exchange to see what's going on there, but that would be a rejection of price and most likely volume. A close back below 1687.18, combined with more than 93 net declining issues in the New York Stock Exchange, and guess what? That says that maybe now we start to, because the bears would truly have control. Now, that gives them first and 10. And the key is, what are they going to do on those first 4 downs out here? If, in fact, they get their offense working. This is the bears that says that the offense will work the price of the S&P 500 all the way down to the June 24th. That's the goal line right now for the bears. That is 1560.33 to 1588.77 on this football field. But those are the parameters you're looking for. 1687.18. The close below that, and the NYSE more than 93 net declining issues. I suppose that based on the way things are trading right now, it would be pretty hard for the S&P to close below 1687.18 and for there not to be more than 93 net declining issues on the New York Stock Exchange. So I'd say a pretty safe bet if the S&P 500 gets back into the lower part of its range that you will have that out there in the marketplace. Let's go take a look here at the SPYs. Let's go see what the SPYs are doing, and we'll go through each of the ETFs, each of the indexes. Right now, the SPYs here 169.0709. That is the May 22nd high. SPYs are trading below that. You could almost say that the SPYs are the ETFs are the better indexes or ETF indexes to look at because they are adjusted for dividends. The problem is they've got fees associated as well, so you got to really use them both. In this case here right now, 169.07 being the number. You saw the 169.06 as the high. So far, intra-session on today's session. Volume so far, 15 million shares. That's going into that, again, May 22nd, 243 million shares. You can see the big volume out there on the May 22nd date. And that correlates also to what we take a look at on the actual index. Let's go take a look at the Qs here because the Qs and the NDX 100 really being the strength out here. The Qs here still trading above the May 22nd swing point. 74.95 is that number, and 59 million shares in that area. What the Qs did on Friday is they closed the gap down that was created between July 18th and July 19th. That had 37 million shares to the downside up on Friday with total thin air out there, 20.8 million shares out there. So the Qs here, if in fact they're able to get above 75.74 on more than 24 million shares out there, that's going to set up a run inside the Qs to about the 77.20 area. That would form and complete a 1-to-1 A to B equals CD pattern. So far, volume-wise, on the Qs here this morning, in the first about 45 minutes of trading, 4.8 million shares. Again, it would need to take out a swing point that's got 24 million shares. So volume-wise, early on, we see it. Whether or not that volume continues throughout the day, that's a whole nother story out there. Let's go take a look at the actual index, see what the NDX 100 is doing, give you the numbers on the NDX 100 out here. The NDX traveling out at 30.76 right now, and a bit of change, 63 cents out there. Really doing the same thing. The NDX would need to close above 30.90 out here, 30.90.89. That would set up the A to B equals CD. That would take us up into the range of right around the 31.48 level. Let's go see what the Dow is doing out here. The Dow, for the last 6-7 trading sessions, nothing but, well, quite frankly, take a look at these. I'm going to blow this up on my screen here for you. We're taking a look first at the May 22nd swing point. You know that number, 15.542.40. You're traveling out at 15.518.83 right now. And if we go back to the trading session here of July 12th, so between July 12th and today, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of 11 trading sessions have really been narrow-ranged bodies out here. Boy, the Dow, for something that's trying to get above, its all-time highs out there from May 22nd, it is certainly struggling out here. It's like it has run the marathon off of the June 24th area, and it just hasn't been able to catch its breath to try to make a move higher. No question, as you take a look at this bar here, now it's not a hammer candle. There was not enough of a decline here off of the highs, but you could certainly take a look at Friday's session, and no question the Bears had the Bears had control. They lost control, and the Bulls certainly took over. You got that long wick out there and a close towards the session highs, and that's a powerful move, no question about it. But the thing is, you have to really put it in context with regard to powerful against what? Powerful against a bunch of other small bodies out there. Remember, the essence of price, the true essence of any candle that you look at is going to be its body. The wicks are nothing more than the extreme high and extreme low, and they give you some information, but the real information, is coming from the body of the candle out there. So today, you get it closed back inside the lower part of its range, below 15.542, along with the S&P, along with the New York Stock Exchange, and it'll just simply tell you who's got control of the ball. Now, that's important, especially when you're up at these swing point areas. If we go take a look at the diamonds out here, Dow diamonds, see what they are traveling at, what they are doing. The diamonds here right now at a price level of 154.76. The swing point high for May 22nd, 155.14 out there. That's got volume of 13 million shares. That area has been attacked with 3.8 million, with 5.4 million. Are you kidding me? Not enough at all to give you any kind of conviction to get up over that high out there in order to really set up an A to B equals CD on the way up. So it has not been able to do that. So far, interest session here, 155.14, which is the exact high of May 22nd, has been the high thus far, and that is on the Dow Diamonds. Now, let's go take a look at the IWM. Here's been the real strength in the marketplace, and the real strength in the marketplace, trading out at 103.52. On the IWM, you've got multiple patterns out here. At least two of them on the shorter term basis. You've got the A to B equals CD. 105.10 was the exact number. It actually got up to 104.98. You got to love that. 104.98. That happened on July 24th. That's a completion of that pattern out here. Then you had a 1.618 butterfly sell pattern. That completed actually on July 18th out there. I gave you the bearish engulfing candle on July 23rd, follow through to the downside with accelerating volume on July 24th, and that is and you got a nice sell. So you got two patterns completing. You did get the sell signals. Friday's session out here was not impressive. It was impressive on the Dow. The IWM, no impression. Didn't leave me with an impression out there. Inside the IWM. Now, the real pattern out here, let's go take a look at the actual index, Russell 2000. I'll show you the one that is the one to really be paying attention to out here. But let's take a look at the RUT, the Russell 2000 index. You can see really the same patterns out here. Now, I'm just showing the completion on this one of the 1-to-1 A to B equals CD. 1052 was its number out here. Right now, it's traveling out at 1043. This says that if the reversal in the market, retracement in the market, whatever it may be at this point, does begin today, whenever it does begin, the target for the Russell 2000 should be the May 22nd high, 1008.23 out there. And it has had nice expansions. But the real pattern is this one. Here is the beauty of beauties. This is the weekly chart of the Russell 2000 futures contract. It has completed three beautiful patterns out here. Beautiful patterns where you expect to see reversals. Number one, you're taking a look at a weekly A to B equals CD up, a 1 to 1.272. That's coming off of October of 2011. Remember, it was October 4th, 2011, where we saw a swing point low. So on the weekly chart, that makes October 7th, 2011. 597.10 is the A point. The B point happens to be this little doji candle out here. On the weekly chart, March 30th, gets up to 850.6. What happens the following week? You get a close below. That means the leaves were falling off of the tree, makes a 50% retracement all the way down to the lows back in June of 2012. June 4th, specifically, was a swing point low. The week of June 8th is what we're talking about here, 728.50. That creates your C point, 1 to 1.272 A to B equals CD. That number, 1050.30. What did it actually get up to? It got up to 1057. Man, you got to love that. So there's your A to B equals CD. Then take a look at that color, that yellow-colored butterfly cell pattern. That completed. And then we've got a 3 drive to a top that completed perfectly with regard to time. Beautiful patterns. Those are reversal patterns. We just need the candle to kick in. That hasn't happened yet. A close, though, this week below 1031.30. That will be your reversal signal. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's down 32 points right now. S&P off 4, composite off 2.5, and we're going to check in on the VIX index. We're taking a look at right now. It's traveling out at a price of $13.55. And key here, if you're watching us on Tiger TV, thanks so much for doing that. Remember, you can always catch the archive of this show on Channel 10, or you can get the live stream of this to your smart pad, smartphone device by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button with three little smart type phone pad devices. Click on that. This show will stream live, and you'll see this VIX chart that we're taking. Like, by the way, the bottom of the screen here, this is really separated into two different charts out here. The bottom of the screen is the S&P 500. The top of the screen is the VIX. You'll see those black angled lines on the bottom of the screen, and what those show you is that each time that the VIX gets below the 50-day exponential moving average, price moves up. Likewise, when price gets above the 50-day exponential moving average, price will move down. Right now, though, what the VIX, what we're paying attention to on the VIX is this little rising trend line that's coming off of the low from March 14th. That's really your first touch point. 11:05. Your next touch point is the low from May 17th out there at 12:26. You can see here that with conviction, it was a break of a hammer candle from July 18th. With conviction, that area was broken on July 19th. When you break a trend line, price will try to get back on the other side of the trend. That's what it has been trying to do for the last three trading sets, well, four including today, that going back to July 24th. Now, right now at 13.56, it sits really right on that line. You'd want to see some conviction here which to me would be a close somewhere around 1370, 1373, 1370, anything above 1370, near 1356 right now, would be a conviction that price is now back on the other side of the trend. Now, does that mean that there's going to be a significant correction? No, it doesn't. But if it gets above the 50-day exponential moving average, that means tighten up your stops, folks, because that number right now is 1468, because serious corrections begin when the VIX index gets above that 50-day exponential moving average out there. So it's got a ways to go before it will get up to 1468. But that's the number as of today. That number will change. Actually, in an hour, it'll also change tomorrow out there. So just pay attention to it. Go ahead and put that on your stock chart out there. So that's the VIX right now, bumping up and trying to get back inside the trend. That would not be so. If you get the S&P to close back below its swing point, you get the NYSE to trade more than 93 net advancing issues out there. You get the VIX above its number. Boy, how many signals is it that we might need that the roll has truly begun inside the markets? I would say not too many more. But we can always look for one more signal out here, so let's go find it. Well, I'd say that other signal would probably come right here from the SOX index, often overlooked. Philadelphia Semiconductor Index out here. Why do I say we're going to pay attention to this for more information? Well, it's because of Friday's candle out there. July 26th, it formed a hammer candle. Now, in this case here, that was enough of a decline coming off of the highs back in July 17th, July 16th out here. So it formed a hammer candle on Friday. That means the low of 470.470. 470, how about it? 470.47 out there. That's a lot of 47s in here. So it's 470.47 out here. You get a close below that. If you are long, you are wrong. And what that really means by saying if you're long, you're wrong, it says, well, price is going to travel all the way down to the June 24th area, which is 458.07 to 448.23. So you should have good support. Good support, 470.47 so far. Intra-session, you've seen a low of 470.84, so that area has not been hit, but it does make that hammer candle very suspect with today's bar out here. But, so there's one more thing. If you want to come back to take a look at the actual SOX index, depending on the type of close that we would see today, and we're a long ways away from that. But at least what we've identified here, I've identified the markers to be able to give us the feedback that we need in order to be able to make our trading decisions as to what to do next. Whether you're long, whether you're short, it just simply helps you by taking a look at all of those different elements, and that's what I would suggest that you do out there. Now, let's go peek around, and let's go see what's going on in the commodities sector out here. Let's peek in on gold. Gold right now trading out at a price of $13.29. Not doing a whole lot today, just a small body candle. Gold is a bit tired. Same thing with silver. Silver trading out at $19.85, not doing too much. Light sweet crude pulling back a bit. Looks like he wants to try to get down to that 100 mark, 99-ish to 100, and that could set up one heck of a nice either long or short pattern out here, because if it holds that area, we've got a nice A to B equals CD that would actually be setting up, and that would be a time to go take a look at. I think it's the UCO, because the 618 retracement, it's like $99 even out there, and that is on light sweet crude. Bonds here right now, not doing a whole lot either, just a sideways trading session out here. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Not a lot of change here in the markets. Dow's off 41 points right now. Let's go check in on natural gas here. Natural gas moving down to an important potential support level, $3.40 so far. The low, $3.41 out here. But don't try to step in front of this. That $3.40 level will go ahead and complete a little 0.786 Gartley buy pattern out here. Let me go ahead and get rid of the 0.618 Gartley buy pattern. That had failed. Let me see. Was this it right here? Yes, it was. That had failed, and when a 0.618 fails, it moves on to the next level out here. We'll go ahead and see if there's any other Fibonacci numbers that show up on the screen for us. We'll put this one in yellow or pink. Let's see. We'll go ahead and put this in at, oh, darn it, didn't mean to do that. Back up one. There we go, 0.786. So that is that's the pattern that it's set up. But albeit right now you're kind of moving down into it. You're at the session lows. You kind of gap down into it today, and so that says, you know what, this is likely going to fail here unless we see some type of bullish reversal signal in the market. It says that really price looks like it's going to make a 100% move of a move. Get all the way back to the February 15th area, around $3.12 out there right now at $3.43. Let's go check in on some of the sectors inside the S&P 500, and let's go see what we've got here. Let's start off with the financial sector out here. The financial sector forming a 1.272 butterfly, doing that on the session of July 22nd out here. Some volume now coming off of the highs here, 36 million shares on July 24th. And a little bit lower, 37 million shares on July 25th. Friday was a light session. Today, so far, 6.4 million shares, so not too bad for an hour's worth of trading out here. So it looks like in the XLF you've got volume accelerating to the downside. Now, we'll get a piece of information inside the XLF as it approaches May 22nd as well. That May 22nd candle is a volume of 95 million shares, so a little sign of strength. But remember, that was a key reversal session as well, 2035, and it looks like it may be able to hit that today or tomorrow. Close underneath 2035, and that's curtains for the XLF. Well, it's not curtains, but what it is, it's a 0.618 retracement is what that would likely set up. That would be a move down into the 1948 type area. That would take you all the way back to July 3rd. July 3rd area, that low, about 1934 to 1952. That's what's going on inside the XLF. Let's go take a look at the energy sector out here. The energy sector right now, that had formed a nice 1.618 butterfly cell pattern. Completed that pattern both on May 22nd as well as, and this is kind of cool out here because it's had a number, it's got serious resistance up at this price level of about $83. We'll call it $84, $83.95, but if you take a look at the that May 22nd pattern, which, by the way, is 19 million shares, that level was tested with 6 million shares. 6 million going against 19 million shares. That, folks, is most certainly a reversal inside the energy sector. What does that set up? Well, sets up a run most certainly for the, I would say at least the June 20th high, 79.75. It's trading at 82.20 right now. Let's go take a look at the technology sector, the XLK. Let's go see what it is doing. It's actually holding up rather well. The XLK has come down into the gap up from July 10th, July 11th. That had 10 million shares out there. It came back with 13 million shares on July 19th. That wasn't so good, but it did hold on Friday, 6 million shares. It really needs to break through the low of 31.37, the technology sector, and if it does that, that'll set up the run for the July 24th area. Now, you can see that it is that first gap down, that June 20th high, that really has been holding price in place, and that's got 15 million shares, and that level is 31.36. Let's go to Lou in Nashua, New Hampshire. Lou, thanks for calling. Thanks for holding. How are you doing this morning?
Good morning. Just wondering to add to Nugget.
N-U-G-T. So let's go take a look at that. And, the key here on Nugget, that's a long position for the gold miners, correct?
Right.
Yeah. So as we take a look at it, the key here, I think, on that trade, Lou, I covered this during the first hour with Dave from Boston, and I think the real key is going to be, and what we established, Lou, during that session was that right now the correlation between the U.S. dollar index and the commodities is in check, is in play right now. And that means you got to really pay attention to what's going on with the euro-U.S. dollar. And it's moving a bit lower here right now and is very close to giving a reversal signal. And that reversal signal would either be a retracement or the beginning of an A to B equals CD down. If it's a retracement, then what you want to do is you want to take a look at Nugget and adding to a position either at as the euro gets to about the 1.3089 or preferably 1.29 level. Now, if it's coming in there with some wide-ranging bars, that says that what the euro would do is maybe setting up an A to B equals CD down. Now, the reason that you want to be paying attention to those areas is because if the correlation between the U.S. dollar index is back in sync with gold and silver, you want to see how it is actually backing off. Is gold or silver backing off, or gold specifically backing off with light volume on its retracement, or is volume expanding to the downside? And that's where you really want to get your message. And the reason is because the GDX, which in essence is what you're trading, the NUGT, it travels with gold, period. That correlation is very, very tight. So I think you've got to pay attention to the euro and then monitor gold to see how the pullback is. And if you take a look at gold specifically, right now because those are the best correlations. Gold has shown that it's a bit tired with its small-bodied candles. Now, the beauty is that it's tired. It's really not backing off with any substantial volume or anything. Maybe it's right around the 1285-ish mark where when gold gets down there, which is nothing more than a dead cat bounce, that might be the spot to actually add to your NUGT position. 1244 would be another area that I would be looking at. So maybe in adding to any positions, Lou, maybe you want to take a look at a scale-in type process. Take whatever it is you're going to risk and break it into 2 trades.
I see. Okay. Do you expect gold to go down to 12?
I don't know. I what I know is that the correlation, we went and we tested to see if the correlation was back there between the U.S. dollar index and gold. And knowing that that was the case, the biggest weighting structure on the U.S. dollar index is going to be the euro. So then we took a look at the euro to see if it was completing a pattern, and it may be forming a reversal pattern that would put strength in the U.S. dollar index. And then it's a matter of now monitoring both. And I really won't know until we see it happen. If the euro is pulling back and does its thing, and gold isn't moving, then the answer is pretty simple. You go ahead and add right now. And I don't mean right now at 1041, but as that happens, if gold's not pulling back, that's telling you that, now that would be a good time to go ahead and add to the position. So I think it's a matter of being patient to wait for some additional information is the way that I see it.
Okay, great. Thank you.
All righty? Yeah, you bet. Thanks so much for calling, Lou. Let's go take a look here at... let's look at some of these stocks that are popping and dropping. And talk about dropping, you've got an equity called Changyu Communications, I believe. The ticker symbol is CYOU, and I think that CYOU needs a little CYA because it's not been covering its assets here as it has been moving down with volume. 19% off of its high here from Friday and with volume. And, of course, where is it going to? Well, all you had to take a look at was that high volume bar out here, which was from February the 4th. This had a million shares, so it's not exactly the most the heaviest traded, most liquid stock out here, but still, nonetheless, those high volume bars are significant. Now, volume on that bar, February 4th, by the way, is I might have said a million shares. What it's already done today is 600,000 shares in only hour and 13 minutes of trading, so that's not good. It's especially not good if you were in the equity because there's another high volume bar all the way back to August 6th of 2012, and that's right around the 2150 to 2340 mark out there. So CYOU needs a little CYA out there right now, off about 19%. We got Priceline is back about 0.5%, not a big deal there. Let's take a look at Intuitive Surgical, ISRG. That is bouncing up this morning. That thing has had nothing but troubles, and I wonder if maybe there's another selling opportunity inside Intuitive Surgical out here. This thing came down with big volume. I need to refresh my chart. I might have a bad piece of data. God, I hate when this happens. I've got a way to trick my system out here. Let me see if I can find that. So we break the 6 hour trading session into what 6 times 6 would be 36, 390. So I got to find 390 minutes. There we go. So there's my 390-minute chart, and now we're back in. Oh, even now we're back. They're not totally in sync. I don't know why. I guess the folks at Intuitive Surgical, they don't like when I take a look at that stock chart. There we go. So Intuitive Surgical here, gapping down with big volume. Right now, all it's doing is just testing the most recent gap down, in essence, which is the 4 p.m. close on July 22nd. That high was 399.87, but going against some big volume on that day, 4.4 million shares as it came into the time frame of July 19th out there. So, shorting opportunities on this thing, I don't know. I don't know if I'd jump in on Intuitive Surgical here. In any event, let's go take a look at a couple of other equities. How about 3D Systems? That's up about 6% here right now. Triple D is the ticker symbol, DDD. Don't know when they are out with numbers. Let me see if they actually came out with numbers here today. DDD. No, I don't. 3D Systems here. I don't see. They were not out with numbers today. Let me do this here. Let me go ahead and delete everything and come on back. So 3D Systems right now is trying to get up to the swing point high from May 14th. 13 million shares, and the number is 51.94. It's up today on 3 million shares, so volume is pretty decent inside 3D Systems. And that could, if it can take out the high of 51.94, that'll set up an A to B equals CD up on this equity. That would actually go ahead and take you to a price level of, let's take a look at it here, about 65.07 would be the first target. So all that 3D Systems has to do today, and it's got the volume behind the move, is close above 51.94 and do it on more than 13 million shares out there. So that's on 3D Systems, and but I don't know when they come out with numbers, so I'd want to pay attention to that before I would get into that equity. But it stock chart is looking pretty good, looking like somebody knows something. Let's take a look at, let's see what else here. Let me see what else might be moving dollar-wise or percentage-wise. So how about this one here, YRC Worldwide? That is most certainly struggling this morning. That is off about 10%. So it's down fairly large. And let's go take a look at the transports. I believe they're part of the transports. YRCW, I think they're a pretty decent weighting inside there. So give me a second here. Man, what a heck of a stock. What a heck of a run this thing has. You want to talk about signs of strength coming off of a bottom. Most certainly this did back here. Let me do one more thing out here. And where I'm going to is the trading session from May 3rd. This thing gapped up to 1160. The high was 1160, that trading session. The prior session was 748, and it was on a just a tear because it ran all the way up to the highs of $35. So that's coming off of a low of 978. That is a heck of a move from May 3rd of 2013 to July 11th out there. So pulling back, starting to pull back with some volume, taking out a B point with volume here this morning. That sets up your A to B equals CD down. That B point that is taken out was July 19th. The low is 28.53, 838,000 shares. It's already done 860 for the day out there. So this thing is going to pull back. The question is to where, and the where on this thing here. The where, it should pull back to about $23.11, maybe $21.63, $22.90, $23.11 as its first potential target. There was another breakout on this equity back on, June 24th, of course, June 24th. So watch for this equity as it pulls back into the June 24th, June 25th area. Maybe that'll give us a little clue as to the markets and where they may be headed to. Let's see what else do we have out here that's popping either to the upside or to the downside. Let's check out SodaStream, SODA. That's up about 4% this morning. See what this stock chart is doing. SodaStream. Anybody out there ever used one of those things? If somebody has, they should give us a call. No, I don't drink soda, so it's going. But I think you can do flavored waters and stuff like that. I do drink water, but the flavor is called a lemon, and I just cut it in half and squeeze it inside some water out there. But curious as to what the soda flavors actually taste like. If you're a Coca-Cola drinker, what's their blend? Does it taste anything like Coca-Cola out there? In any event, SodaStream here, kind of struggling. It does have a swing point that it's dealing with, which is back here on July 16th. The top of that is 60.16. The low is $55. It came in there. That had 2.6 million shares, was coming back into that area with 1.4 and 744,000 shares, but not trading above that level here right now. This thing did break out here recently, back in the May 1st, 2013 time frame. But if this thing ever does fall out of bed, this is a dangerous site out here because SodaStream's got some high volume, untested areas out here. Well, I'd say the next area to be careful with on SodaStream would be about $37. It's at $59.38 right now. 877-927-6648. Dow's off 34. Not a lot of movement here. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
That makes people come to folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 35, S&P off 4.5, Composite down 5, and at a request in the den to take a look at a stock equity, the ticker symbol URZ. The name of the company is Uranerz Energy Corp, URANERZ. You pronounce it, as I certainly butchered that. They are a acquisition, exploration, development, uranium, and mineral resource company in the United States. Now, earlier in the first hour of the show, for Dave in Boston, we were looking at URRE, also another uranium stock. I've got them both up on my screen here right now, both monthly charts out here. So it most certainly has seen an explosive type move off of the bottom. You can see that URRE looks better as far as the volume move off of the bottom. Both of these are monthly charts that we're taking a look at. If you're so inclined to play something like this, though, URZ might be the better option, and the reason is you could play it as a unexpiring option trade. It's trading at $1.62 right now. What I mean by that, I'm not suggesting you take the trade. If you were interested in taking the trade, the best risk least risk trade that you could take would take your trading capital. And this is what you want to, this is my opinion, is what you want to look at for a lot of equities that are, trading at $1 or lower. $1.60 works as well, or wait for a pullback. But what you want to do is take your free trading capital. Let's assume it's $10,000. And take 1% of it. So now you're dealing with $100. Take that $100, that's all you're risking, and divide it by the share price. So you'd have an unexpired option trade on an equity like this. In this case here, 100 divided by $1.62, I suppose that's going to give you somewhere around, 75 shares, something like that, 50, something like that. So, do the math on it, but that is how I would play something like this. Whereas on URRE, it's trading at $5.30. Doesn't really offer you that kind of setup. You can see these things here work in tandem with each other. I don't know really what's behind the move there. The stock charts themselves look just absolutely awful. There's no volume at the highs. To speak of. Inside URRE, I guess you could say you had some volume up at the November 30th high around 39.50, but you had some volume really come off of that high the week or the month of March 31st, 2011. So I don't really like that. In fact, in the case of URZ, it was nothing but volume off of the top there, March 31st, 2011. So if you're looking to play metal type stocks, I think the gold and silver offer you better opportunities. But you most certainly could take an unexpiring option trade on URZ if you were so inclined. So let me set up the rest of the day for you, what to be paying attention to. We'll go back to the indexes. Number one, you want to take a look at the New York Stock Exchange, and if you see net decline in issues of more than 93. Right now it's at minus 880, but the day is still young out here. That'll tell you the bears have taken control. You can also look at the SOX index. You get a close below 470.470. 470.47. That's the second time I did that. That is very bearish. It will have broken Friday's hammer candle out there and says June 24th is the next target. You want to take a look at the VIX index, which right now is trading right on the trend line that is trying to break inside of. I would say it closed certainly at 1370. That will be inside the trading range. So the combination of the VIX index getting above that trend line and the New York Stock Exchange giving you a bearish sign, that would say be very careful out there. Most certainly tighten your stops. Then you'd, in conjunction with that, you'd be looking at the S&P 500. If the S&P 500, all that takes place, and the S&P gets below 1687.18, because it's most certainly going to be on light volume, that will be another bearish reversal signal, or at least a signal that the bears have taken control of the ball, and it'll be first down and 10, and then it's a matter of what do they do. Where they are headed to, their goal line, though, is the June 24th lows out there inside the market. Folks, it is a marvelous Monday. That means Basil Chapman is up next. Let's go ride that Chapman wave. Following Basil, we got none other than Larry Pesavento. He's in the bullpen getting warmed up. And then it's Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a great Monday, folks. I look forward to seeing you in the morning. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.